All right. It's the 23rd of October 2024. We are about 30 minutes before the NY session. Yeah, we've got about 30 minutes before the NY session. We'll be getting to the charts, do analysis as usual. Just give me 2 seconds. Okay. Okay, let's get to the charts. Okay. Right, we're on the daily time frame here. Price is very, very, very bullish. Okay. We'll look at that move. 1,526 pip move, 1,500 plus pip move since the last daily pullback. Tried to get to do 600, couldn't. This was on the 10th of October. That's last Thursday. So last Wednesday we ranged here. Last Thursday price started, not last Thursday, Thursday before last, price started to push up, and we're still pushing up. Already over 1,500 pips, okay, and we're still pushing up. We're very bullish. There's absolutely nothing, like I said, like I've been saying this entire week, there's nothing on the left. Even last week, there's nothing on the left. So we don't know where price is going to pause, react, pull back. There's nothing on the left, no past price action on the left to know when a pullback is due. Okay, we've closed right at 2750. This daily bullish candle has closed right at 2750. No bottom wick, no top wick. Right? It's just a lot of bullish strength, just like this candle. Right? Just like this candle here. Very similar to this candle as well. Right? This had a bit of a top wick, so it had a bit of a range of trade, but not much. So these candles, this candle, this candle, this candle, this candle, they're all very similar, very bullish. And price is kind of pushing up. So the next stop, if 4-hour candles start to close above 2750, next stop is 2800. That's where I've tentatively put my TP at. I'm going to put an alert there. If I see 1-hour candles closing above 2800, then I'm going to push my TP to 2850. Right? This is a trade I took at the beginning of the week. I'm still holding a small percentage of it. If you get here, that's a over 800 pip move. I'm very sure. It's very likely. I don't want to say I'm very sure. I don't want to be overconfident or anything, but it's very likely price is going to push past to 800, to 850, even to 900. Right? That's very possible. There's a lot of uncertainty with U.S. elections. Elections are just around the corner. I think. When is it? Today is the 23rd. 6th. Yeah, we just got about 2 weeks. Just about 2 weeks to U.S. elections. When is the election? The 5th. Next week. Yeah, 5th. So just under 2 weeks for the U.S. elections. So like I said last week, I'm not planning to trade this week. 4th to the 8th, I'm not planning to trade that week. Okay, I'm not planning to trade that week. I might do the live streams just to look at, just to draw zones and to mark up zones and support resistance levels and stuff like that. But I'm not personally going to be trading that week because there could be a lot of slippage. You might get into an order, you might get into a position at the wrong price. You try to close, the trades might not close. Anything is possible this week. There's going to be a lot of stuff happening. So the following week is CPI, PPI, and retail sales week. That's a far better week to start trading in November, right? So I'm going to leave this first week. I'll see if I continue the streams or not, but I'll try to do the streams. But I won't be personally trading I won't be trading this account. Um, yeah. Okay. So today there is no news again. There is no news today. So we didn't have news on Monday, Tuesday either. So there's no news today either. And there is unemployment claims tomorrow, which is not going to do much. That's irrelevant. Okay, that's not going to do anything to the market. And then on Friday there is no news either. So this is very similar to the previous week. This week was exactly the same. Right? There was no news there, and this week is the same. Um, okay, so this is the daily time frame. So price is still pushing up. Let's look at our trading chart. Okay, let's drop our zones. Let's get rid of all of this. So yesterday, before we do that, I want to recap. I kind of do this every day before I start. I recap what happened with the previous day. We had drawn this zone here, a rally, two basing candles, and a rally. And I was expecting price to come there or come here. It didn't come to either of them. It just pushed up. It's too bullish, right? But this candle here, after this candle formed, this candle closed at 1700 server time. But just before it closed, on the 30 minute, you can see that price, well before the candle closed, you can see that price made this, uh, this liquidity candle to push up from the zone, right? This candle right here. And the candle and price came to that candle. So if you look at that candle on the 15-minute time frame, that's a liquidity candle right there. That's about a 38 pip candle, and price came into it. All right, this was after the 4-hour candle closed. This was the dip into it, into the center of that candle, the midway point of that candle, and then pushed up again another 240 pips. Okay, so we're very bullish. Let's get rid of all of these and start analysis again. Okay. All right, so we had a rally, a base, and a drop. So there was supply here, and this move up took out that supply. So there's a demand zone here. There's a drop and a rally. So there is demand there. If you look on the 1-hour time frame, I'm sure we'll see a basing candle. But let's just mark this for now, the way we see it here, and then let's refine it on the 1-hour time frame or on the 30-minute time frame. But there is demand there. Okay, there's a drop and a rally. There is there's no supply on the 4 hour. There was supply here, but this 4 hour candle broke right through it, so there is no supply on the 4 hour. Let's go down to the 1 hour. So on the 1 hour there is supply form right there. I am going to mark that. Okay, that's a rally and a base and a drop. I am going to mark that there. Okay, and this is the 1 hour base in candle. Just maybe look at the 30-minute. Okay, yeah, it's better on the 30-minute. So you have a drop, 3 base in candles, and a rally. Okay, a drop, 3 base in candles, and a rally. On the 1 hour, that's how it looks like. A drop, base in candle, and a rally. Let's put those numbers there. That's the close. This is 003, 792. Okay, and on the supply zone is 845. Okay, so that's the closest for our demand zone, and that's supply on the H1. Okay, let's get rid of that. And yeah, so there is a 4-hour demand there. I just want to check if I need to extend this as a 50 pip body. That's 53. Yeah, so maybe, yeah, that's better. 661. And the reason I did that is this candle has also, this candle also, just like these two candles, this candle also has more wick, more collective wick than it has body, right? And the size of the body. So the collective wicks of this candle are larger or are greater than the body of this candle. And that's the reason I considered this as part of the base. So it's a rally, 3 base in candles and a rally, right? And prices came almost to it, but didn't get there. Okay, so let's extend this right as well. That's from yesterday. We had this drawn out yesterday, and this is from the previous day. This is from Monday. Okay, yes, if you want to see how these zones were drawn, you can watch the first 30 minutes of yesterday's stream for this zone, and the first 30 minutes of the previous day stream on Monday's stream. That is the 21st of this month. to see how this stream was drawn. Just watch the first 30 minutes, and it's very clear how I drew it. It's exactly how I drew these. Okay. Okay. This is what we've got. Price can pull back here to continue higher, or it can pull back here 100 pips to continue higher, or pull back 200 pips or 175 pips to continue higher, or it can even pull back here about 300 pips to continue higher. So 100, 175, and 300, right? That's how far these zones are away from current price. This zone is 100 pips away, this zone is 175 pips away, and this zone is 300 pips away. All right, so price can pull back to any one of these zones to continue higher. So we're going to take a closer look at these zones and see which area precisely price can pull back to get in on buys. Okay. Okay. So before we do that, we got to identify which ones are high liquidity zones and which ones are not. Right. So these are high liquidity zones from the previous days. Okay. So there is demand here, and this demand took out this supply. So there was supply right here on the 1 hour. Right. Very clear supply zone right there. And this move up took out that supply. This demand zone took out that supply, making this a high liquidity zone. Okay, that's how you identify high liquidity zones. A zone for it to become a high liquidity zone needs to take out an opposing zone. So this H4 demand zone took out this H1 supply zone. Right, there is also H4 supply right there. So if you see, there is H4 supply right here. That's a rally, a base, and a drop. And this move up took out that, so making this a high liquidity zone. Okay, we're going to take a look at the one below. This too took out this zone here, right? This move out took out that. So let's just inspect it on the H1. So there was that. And price took out, yeah, right here. This candle, the moves that started here, took that out. 15, 17, yeah. Yeah, right here. And price did come to that. We pushed up. That would have been a great trade to take yesterday, in fact, because we did take out that H1 supply. This move up took out this supply, and it was this candle, and this candle price came exactly to that candle, and that would have been an excellent trade to take yesterday. This candle right here, straight up 240, 250 pips. So this too is a high liquidity zone. Okay. All right. So we got about 9 minutes for the NY session. Now, has this Supply zone taken out anything? No, there is demand right here. There's rally, a base, and a rally, and this supply hasn't taken this out yet, right? So this is not a high liquidity zone. So these both are high liquidity zones, and the ones below are high liquidity zones as well. So if price does pull back to any of these, we can look to take buys. Now, let's take a look at what price has done so far for the day. Um, okay, that's the market open right there. Mm. That's the market open right there, right? So price back. Okay, so this is the Asian high right here. That's the Asian high, 718. And this is the Asian low, 792. Price broke the Asian high, 78. This is the London low, 816. That's the London high right there, 845. Okay, right. So the market opened here. Price pushed down, pulled back up, creating the Asian high, continued to push down, created the Asian low, came back, broke above the Asian high. There's a lot of volume, so it didn't even um, struggle to break the Asian high. Very easily broke the Asian high. The candle came up here, pulled back a little bit. The next candle broke the high, closed above, continued straight up, ranged for a bit, came down, created the London low. Yeah, so we created the London low, then continued up, created the London high, and then it's pushed down since then. And we're ranging. Right now we're ranging between the London high and the London low. We're ranging at 2750. It's a psychological number. Price is deciding what to do next. If it closes below the London low, if you close below the London low, then very likely we're coming to the Asian low, right, where this demand zone is, to this roundabout to this area, right? If we reject this area, the London low, and the EMA, there's an EMA right there, there's a London low right there, there's 2750 right there, right? So if you reject this area and push up, if you close above 2750, we're heading back to the London high. And a close above the London high will carry price further up, okay? So that's how you read price. So we have the London low here, London high, Asian low, Asian high, Asian low. So we close below, again, I'll repeat, if you close below the London low, we're coming down, straight down here. We've got clean space to the left. We're going to come down to this area right here, our demand zone. If we reject this area and close above 2750, if 15-minute candles start to close above 2750, we're heading back to the London high. Okay, that's the analysis. Now, we're going to be prepared for both scenarios. If we break, there's a demand zone right here. That's a rally, base rally. That's a demand zone right there. It's on the H1. Okay, but on the 4 you can't see it, but on the 1 there is a demand zone there. If you break this, then this becomes a high liquidity zone. So we're going to look to see if price pulls back up, if there's an area to take a trade to come down. And if price does close below this, when it comes down, is there an area where we can take a trade to go back up? Okay, right. Just give me 5 minutes. I'll be back in 5 minutes. Okay. So candles need to close below the London low. A 15-minute candle needs to close below this. At least a 15-minute candle needs to close below this for us to continue down. Okay. And if it does close below this, then this becomes a high liquidity zone. Okay. So if price comes here, that's a 20 pip zone is a very narrow zone. Just want to look at this on the 5-minute. Yeah, it's going to break through this. If price closes below here, there's going to be bearish volume coming in. If you close below the London low, there's going to be a pullback to 2750 or higher, and bearish volume is going to come in to continue down. And if it does come down, we're going to break this low, right? We're going to break this area. And we're going to come down here to this zone. Okay, that zone is not going to hold. We're going to come down here. Yeah. Forty-four 959. Okay, that candle right there. And that candle is where that EMA is as well. So maybe that candle right there. 1 minute. Okay. Yeah, that's the only liquidity candle out of this zone that may be able to hold price from going further down and reverse price. This candle right here. Okay, so mark that candle out. On the 5 minutes, it's 3 continuous 5-minute bull candles. This 5-minute here is a bullish engulfing candle. That's a liquidity candle from this zone. Price did come deep into it, and we pushed up and broke above this here. So this 40 pip range could hold price from coming down further and reverse price. Okay, this 40 pip range right here, that 15-minute candle. Now, if we were to look further down, if price does come further down here, there is this 1-hour candle right here. That's an engulfing candle. Just mark that for now. That candle and that candle is 94 pips. It's too much. Let's look at the 15-minute. This candle right here. This candle. But the problem with all of these candles, the price has already come, has tapped into it. So the next time we come there, we're going to break right through it. Yeah, We're going to break right through these zones. We're not going to hold. Price is going to drop further down if we get there. Or we just react here and push up. So I'm going to mark this zone. I'm going to mark these areas. I'm going to put price levels like we usually do and see how price reacts at those levels to take buys. Okay. 550164. 550164. Okay, that's 37 pip range. That's fine. This is a 56 pip range. That's large. Let's look at the 5-minute. Much better, 40 pips. This high is 933517. 517. Low 517. We are pushing down. We're breaking this low here. 5-minute candle close below 2750. Price is pushing down. This becomes a high liquidity zone. Yeah. So now this zone has taken out this supply, this demand right here. Okay. So let me show you what that looks like. So that was the demand. Rally base rally taken out by this move down, making this a high liquidity zone. Okay. Now remember, a 15-minute candle needs to close below the London low to continue here, right? You need to close below to continue. We've got about 5 minutes for the 15-minute candle close. The candle needs to close below to continue. And this is now a high liquidity zone. And price is coming here. It's a 44 pip zone. Yeah. Okay. Now, from this, let's take a look. Okay, these are fine. We're going to leave them here because price might take a few minutes before it gets here. We've got about 50 pips more for price to come down. Now, if price comes back up here, I can sell here, right? I can sell here, provided this area is respected and price continues down. That is a liquidity candle from this area. That's a 36 pip candle. That's fine. It's a 60 pip candle. It's too much. Seven six one four two. Okay. Okay. So we seem to be coming down because 2 minutes more for this candle to close, and it seems like we are going to close below 2750. And if we do, then we should the next time if we close around this London low, we close around this area, the next candle should pull up, and then we should break the low and continue down. So price gets in there, 36 pips, 5 minute, 583. That's about a 17 pip stop loss or a 20 pip stop loss. That's fine. We should respect this high here. That's a liquidity candle, but we should respect this high. Yeah, I'll wait higher. Yeah. Open is 712. So if you pull up to this zone, this is where I'm looking to take sells. 2755.8 and 2757. Okay, 2755.8 and 2757 stops above here. Anticipating price to come back to around 2750. Okay, so it's about 25 pips on that. Expecting about 2 to 1, maybe even come lower, 3 to 1. Okay, so that's the sells. Stops above there, and if you come here, then that's even tighter stop loss. It's about 13 pip stop loss, 12, 13 pip stop loss. Price to come down. Okay, you can place pending orders here, or you can just wait for price to get there and then open a market order. That's possible too, but you can place pending orders because we have a fresh zone. We have a high liquidity zone because this demand zone has been taken out by this supply, and we have a liquidity candle here. So price, when it comes here, it's the chances are for it breaking with just a single candle are less. We're going to have some sort of a reaction here, and that is what I'm counting on. Price comes up here, some sort of a reaction to get in on a trade to come down. Okay. Yeah, stops above that. So 58.45, 58.85. Okay. Right. So the 15-minute candle did close below 2750 and right at the London low, which is perfect. So now the next one should pull back up to this area and continue down. So we are coming down here, right? We are coming down to this area. And for sells, 2757.1, 2757.1, 2755.8, okay? Which stops 2758, roughly 2758.5. Yeah. Now, if you come here, this is that candle right there. So high liquidity zone. 2744. So if I take in a buy here, the stop loss is quite wide. I would prefer this one here. And stop loss under this candle, it's 23 pips. But if it price does come here, we're very likely going to break this low and continue further down. That's very possible. We are pushing down now, right? We closed a bar below 2750 and the London low. So now we are coming down. As anticipated, price is coming down. We should come down to this area right here. Okay, it has another 30, 30 pips, 30, 35 pips to go to come down. Now, if we do break this low and come here to this zone right here, it's a 40 pip zone. I'm going to be taking very small orders here, the smallest possible size. Because the idea is that I want to hold and not close partials. That's the idea. To not close partials, to hold the buys. Unless we break below here. Then obviously, once you break below here, we're coming further down and so there's no point in holding this. But the idea is if I get in here, I'm going to hold. Take a small position and hold. Take a small position and hold. Let's place a pending order there. That's the idea. To hold at these levels. Not to close the trade. 28, 45, 28. So the very small positions, the smallest possible, one micro lot. Can't get any smaller than that. Okay. I already have a trade running from below. I am. I've got positive gains for the week, 4.5%. So I'm not too worried about that. So really small positions. The reason what I would usually do is I would be taking a trade here and putting my stop loss underneath the zone, and then closing partials at about 30 pips or a level of resistance, and letting the rest run to uh, the opposing zone, right? But in this case, because we are very bullish, and I believe we're heading towards 278, heading towards 2,800, probably at the end of the week or next week, I'm going to hold these positions. But the stops are going to be obviously um, the stops are going to be below this, right? So yeah, above maybe here. Yeah, maybe below this entire zone here, right? We are pushing down. So one is right there. The next pending order is here. And then in this candle, the next order is here. That's the candle. It's the open 672, 671, 672. Okay, so that's the next zone. Because if you do come to this candle, that's a drop base rally on this candle right there. And then if you break that low here and come to this candle, which is a 15-minute candle, which is this candle right here, there's a zone here, 317, 317, almost at the first buy order. Then, yeah, so first one triggered, it's fine. The next one here, close 248, 248. Okay, so there's a 15-minute there and a 5-minute there. That's in that candle right there. So I'm going to put in those orders as well. 17, 5, 48. Okay, so these are like really small orders, and the idea is that we shouldn't break this zone. If we break this area, then it's not valid. And the idea is to hold these trades once I get in, to hold them. All right, so we come up here. Maybe I'll hold them. I want to see how candles begin to close, and once we come here, I'm going to pay attention to what candles do when it comes here. And if we do break above, then I'm going to hold them all the way up. If we come up here, I'll probably bring stops to break even and leave it. And if you do break it, then I'm going to hold the trade with stops at break even higher. That's the idea. Okay, so 2744 got triggered. Yeah, we are pushing up from 2744. Let's see if we can come deeper and get in on. That's right. So So 2800 is the TP on all of them for now. I may close these trades much before that, depending on what price does, what the higher time frames begin to do, right? So depending on what the 1 hour time frame does, I might either hold these trades or close. I mean this trade, this current trade, this trade down here that I got in on Monday, that I'm not doing anything. That's much lower. That's about 260 pips away. I'm not doing anything there. I'm going to leave that trade that stops a break even. These trades, let's see. So price, so basically uh, we should respect this 4 hour zone. Okay, that's the whole idea. The price shouldn't break below this. Yeah, it shouldn't break below this. These levels I've taken to push price back up here, and these levels should, this demand here should hold, this demand here should hold. It's a 100 pip move. Let's see if we get there. So it's touched the EMA as well. As I said, price uh, was very likely to come to this EMA because that's where the zone was and that's where the candle was, the liquidity candle was. So it did touch the EMA. It is kind of reacting to it right now. But we need to see how the 15-minute candle is going to close. 2 minutes more for the candle to close. It's very likely if the candle closes below the Asian high, then we're coming down to the Asian low. And this order is going to get triggered as well. If that happens, this order is going to get triggered. So if the candle closes below this, then we're coming further down. Just give me a couple of minutes, I'll be back. Okay, so the 15-minute candle has closed inside this area. Yeah, we're probably heading down. This is a top wick. Price is trying to create a top wick to probably head down. There is a 1-minute rejection. You need to see a 5-minute rejection from this zone to know if price is going to continue higher or we're going to go deeper in. I would prefer if price went deeper in to take and trigger this area and came down to this area or even further down before it goes up. But if it does, there's nothing you can do about it. Yeah, so what's going to happen now if price closes back above the Asian high? If we close back above, we closed below the Asian high, we close back above, or we close back above the London, sorry, if we close back above the London low, right? We close below, we came to our zone. If we close back above the London high, then we're going back, the London low, we're going back to the London high, right? That's the idea. And in that case, once we close back above here, I'm going to hold this trade, because if you break the London high either today or tomorrow, then we're continuing higher. Okay, that's the plan. Because this is a new high. You want to see during volume hours, you want to see price to retest this high via a 30-minute support needs to be created to go and retest the high, right? So that's the kind of confirmations that you're kind of looking for to see if you want to hold this trade or not. So if you see a 30-minute support form and then the next candle break the 30-minute high, then it's more confirmation that price is heading higher, so you can hold this trade until we come to these highs and maybe close this trade here, right? So that will be about 140, 150 pip move. Or if we close above this candle here, if we close above this light red area, if a 15-minute candle closes above this, then we're breaking. Right? So above this light red area, if you see a 15-minute candle close above this, then we're breaking this zone, and once you break the zone, we're heading higher. Yeah, so prices already moved about 200 pips today. So in the Asian session, we moved about 91 pips. And in the London session also, we moved about the same, 100 pips in each session. So we moved about 200 pips today, Asian and London, both collectively about 200 pips, 100 in Asian, 100 in London. So this maybe price just creates a doji again like this. We don't know. There's a lot of time. There's about 8 hours for the daily candle to close. So anything can happen. It can close bearish. It can close bullish. It can close a doji. A lot of things can happen in the next 8 hours. All right. So we're going to just wait and watch. So if price comes further down, and so on these orders, there are 4 orders here, four pending orders that I've placed. They're very small orders. This is, sorry, 5. 1, 2, 3, 4, 5. 5 orders that I've placed. They're very small orders. This is not usually what I do. I do trade inside a zone. So if I did take a trade here on a regular trading day, my stop loss is under that candle right there. All right. And it's about I generally take about a 30-40 pip stop loss at the most 40. I don't take stop losses anything more than that because I want my RR to be high. But we're very bullish on the high time frames. The whole idea is to anticipate price to head to 2,800, right? So that is why I've taken very small positions, multiple positions at these levels. These are very logical levels. They are liquidity candles from high liquidity zones. All of these entries are liquidity candles from high liquidity zones. The stop loss on all of these are here, the bottom of this zone. If we break the bottom of this zone, this entire setup is invalid because we're heading further down, right? And then there is no point in holding these buys we're done. And then we go to see structure form to head back up again. So price shouldn't break these lows here. Okay, so on the 4 hour, so that is a 4 hour low. If we can break that low, but we have to respect this demand zone right here. Price hasn't come to this demand zone yet. So that's a rally, 3 basin candles and a rally. Price came close to it, but it hasn't come to the demand zone. That's the demand zone, right? That's the close of the candle is 36.61 and this low is 38. So we haven't come to this demand zone yet. So there are 2 demand zones here overlapping each other. There's one here and one here. So price needs to respect the bottom one or the one above to continue higher. If it breaks the bottom demand zone, then this entire setup is invalid. Then we're coming to this demand zone down here. Okay, that's the plan. So it's about 160 pips for price to break the zone. Let's see if it can do it. If it can do it, great. Then yes, I'll take a loss on these trades. But then if you come down deeper, there are entries here. All of these are entries. And then the profit potential on these entries are much higher. We got about 300, 400 pips running of profit potential on these entries down here. Right? These are just about 100, 150, 200, but these were about 375, 400 pip. If you come down here, that's about a 450 pip move up. Then, yeah, so that's, and if you get up there, that's even larger. Let's see what price does. So yeah, so as I said, that's a top wick. Price created a top wick to come down because we don't have a 5-minute, that candle is there, but we rejected that area to push down. So if I were to draw support resistance levels now, okay, there is one right here. So we're heading lower. Price to touch that area. Yeah, that's better. That's better. 58, and this one is 50.55. Yeah, that's the next level. And then we have this here. $23. 5. Okay. Yeah, so we rejected that area and we came down. Let's see, where are we coming to? Yeah, so there is a level right here. That's the next level right there. 193. Then we have this level right here. Yeah, we're coming further down. There's no bottom wick, so price is coming further down. The next candle should break and come further down. Yeah, we're coming down. $95. 5. 48. Okay. Just not too happy with that level there. Yeah, that's better. 63. 6, perfect. Okay. Yeah, that's better. Hmm. Okay. So those are the levels, SR levels, right? So once we close below this, or we close here inside this gray area, the next candle breaks the low, we should come down to this, right? And then let's just continue down since we're doing this here. Yeah, so this is the next one. Five eight zero. Okay. Yeah, that's the next one right there. So got three above current price, three below. We can come down further. We'll draw a few more down. It's good practice as well. Two nine eight. Yeah. $52. Six. Okay. These are the levels, right? So drawn quite a few of them. 3, 4, 5, 6, 7, 8 support resistance levels. So just by watching what I did over the last 10-15 minutes, you should learn how to draw support resistance levels, right? I use the 15-minute time frame to draw them. If you draw them correctly, they'll be correct on 3 consecutive time frames. I always say this. If you go up to the um, H1, you take a look at these zones, they're perfect, right? You see how prices touched these, touched here, reacted, touched here, reacted, touched here, perfect. You go down to the 30-minute, also very precise, okay? Very precise. You go down to the 15 minutes, which we trivet on, obviously, also very precise, right? So now, price did close below, touched. You can trade once. If you draw these SR levels correctly, then you can scalp easily scalp, but I don't scalp. So for example, if you close below, then you obviously the trade to take is when price retests this on the 1 minute and rejects, to take the trade coming down to the next support level. Like for example, this candle opened at 15:30 on my server time. That's the candle, that's a rejection, right? So here, so when price came down, we closed at 15. So this candle closed at the 15-minute time frame. Okay, here this candle closed at 15:30. So the candle closed here, right there. That's the candle close, right? Then wait for price to pull back, get the rejection. You can touch trade this or wait for the candle to close, 1 minute candle to close. Then either when the candle breaks the next candle low, you can take the trade coming all the way down here and stop loss above that candle. You can easily get 1 RR, 2 RR, and that's the way you safely scalp, because you know the momentum is down. So these are your SR levels. Those are the areas price is going to pause, collect liquidity to continue in that same direction, right? It's going to collect liquidity for the lower time frame. These are all these are not high time frame SR levels, right? They're lower time frame SR levels, 30-minute and lower. So, or 1 hour and lower. So once you're getting on a trade like that, then you can hold it either and see if a 5-minute candle closes below this, then you can put your stops at break even and hold it for the next support level. And if a 5-minute candle closes below that, put your stops. Your stops can stay at break even, or you can close partials and wait for the next one. So that scalping trade, which is a 1 hour trade, can easily turn out to be a 4 hour or a 5 hour trade, right? So that would have kind of got in there. 18 pip stop loss, 38. It's already 2 RR. Come down here. Yeah, that would be about 3 RR, easily 3 RR or 3.5 RR, 4 RR even, if we come further down. So the 5-minute candles are closing below this. Now I've got another entry right here, 2740. This level right here, right? So I said at the beginning, this should break. Once we close below the Asian low, price should come down and break the Asian low and coming down to this zone, right? That was the initial analysis. So I did take these entries here in case price did bounce off that liquidity candle and continue. I wanted to get in on the trade. That is why I took the entry there. But now we've closed below the Asian high. We've tapped it. You can see price closed below. So you can look on the 5-minute or the 15-minute is very clear. Let's just look at on the 15 minutes. It's very clear. We closed below the Asian high, came back, tapped it, and continuing lower. Right. So we're continuing lower to come to the Asian low. Right. That's the Asian high, Asian low. So we're coming down to the Asian low, and then we got to see what's going to happen when it comes to the Asian low. Is price going to react to this and continue back up, or if we body close, if a 5-minute or if a 15-minute candle closes below this, then we're coming into the next zone. But the whole higher time frame idea is this is a pullback to move back up. But the only concern is that this candle has no bottom wick, so maybe we are coming a lot further down, maybe to this area. That's very possible. We come to this area to grab liquidity to go up. That's very possible. But because we've been very bullish last week and this week, that's the reason why I'm taking buys in these zones. Any other time, I would have waited for price to come into these zones rather than trying to take trades here. But because we're very bullish, I'm just kind of willing to take trades a little higher to pull back up. So if price does go back up here, then that's 112 or 115 pip move up there. So we are rejecting this support right now. Closed above the support. 5-minute candle, 30-minute candle is about, the 1 hour candle is about to close. Rejecting this area. Interesting. Rejecting this area right here. Let's wait for the 15-minute candle to close. It has to close above. It has to close bullish. You need a bullish close. Four three five 082. Okay, got to order right at that support level right there. So the 1 hour closed above this resistance right here. Got an hour for the 4 hour candle to close. 30-minute close to doji. 15-minute also closed almost a doji, but rejected this area. That's why I drew the fib there. I took another entry at this mid of the fib level, 2742.59. Maybe I should have taken it up down here, deeper here. That would have been better, but doesn't matter. I've taken one small position there. And I'm going to hold all these positions, just as I said, explained earlier. I'm going to hold these positions to the bottom of this zone. I'm going to hold them. The whole idea is the high time frame for price to push up, back up to this supply zone. That's the plan. So even if price breaks this low, that's okay. The idea is the high time frame bias is we are very bullish for price to push up. Yeah, that's fine. We did break that. Okay, so we are coming down here. And we've broken below this. So if price breaks this candle low, then we should break this low here and come further down. Let's take a look at this. Yeah, that high should break. This high. Yeah, this candle doesn't have much of a top wick on the 1 hour. But we have rejection there, clean, push down, liquidity candle. We are pushing down. So it's a liquidity candle, 5-minute liquidity candle to continue down. And that price did try to get back in, it couldn't. And yeah, it did touch that area. It couldn't break the high of this candle. So price pushed 177 pips down. So we're coming further down. We should come down to the Asian low because we have closed below, 5-minute candle has closed below this support now. So we should come down to the Asian low. So I'm going to watch, I'm going to wait for the 4-hour candle to close. I'm not going to do anything under the 4-hour candle close. At the 4-hour candle close, it's possible that price comes much deeper, 130, it drops much deeper. If it begins to drop here, maybe I'll probably close a couple of the positions above. Because these 4-hour candles have no bottom wick. This candle especially has no bottom wick. So price very likely can drop below that here and then continue higher. So then there is no reason for holding these trades all the way down, holding drawdown. I might, yeah, low 3802. Low. Yeah, if we do break below here, close below this, then I might just close maybe these two positions. Because once we close below here, we're coming straight down. So let's see. So price has come back to retest this resistance area right here now, support turn resistance. It was first support, now price closed below. Now it's come to retest it, possibly to continue down. Yeah, so we did retest that area and we are coming down. So if the 1-minute candle closes like this, then we're heading down. And if you break this, then I might just close these two top positions. I might just close these two. Or I might even close all three of them. Because we are going to break this low and we're coming down deeper. The whole idea is to take buys and hold, but I don't want to hold buys beyond this point. And it's very likely that this 4-hour candle right here that opened here is the 5 a.m. 4-hour candle that opened, has no bottom wick. So price can easily break below this. And that's another 122 pip drop. Can easily break below this low. Because this is all heavily tested, this area. So if you break this low, I might close close these three positions. Very possible I'm going to close these three positions once we break. As low is 37.99, 37.92. Yeah, we're coming down. We're coming down. Because once price starts moving up, you can always add your risk back on. No bottom wick, possibly coming down again. So yeah, so once we come down here, I'm going to close these three positions. Right, I'm going to close these three. That liquidity candle obviously didn't work. We broke below. I'm going to delete that. Slow 37.92, 37.52. Right there. The 4-hour candle, the 1-hour candle broke the low, pulled back up, broke the low to continue low. So it's very likely to break this low here. Once you break this low, I'm going to close these positions. And then maybe I'll delete these pending orders because I'm pretty sure price is going to break below this low and come deeper. This is a fairly big liquidity grab. Yeah, we're coming down. We are coming down. Yeah. A minute and a half for this 50-minute candle goes closing bearish. The next one is very possibly going to break the low and come down, or even possibly this one comes straight down. Yeah, there we go. That's the Asian low. So once you break this, then we're coming further down. I'm going to close those positions from above. There we go. Here we go. Yeah, so 15-minute candle is about to close. We should break the low now, then continue below the Asian low. So I'm going to close those three positions. There you go. Yeah. Okay. Close two. Right there. Okay, close that. Now that's fine. Gave that liquidity candle a shot to go back up. It didn't. Now, yeah, we've broken below this. Yeah, price has now come below this area right here. So let's just get rid of that. Get rid of that. Hmm. I want to see a 15-minute rejection like this, a wick, or like that, or like that, to be able to add those orders back in, the ones that I closed, to add them back in to go up. Until I see that, I'm not going to add those orders back in. I do have a pending order here. Maybe move that. Yeah, maybe delete this one. Yeah, this price A is coming down. We've broken the low. We're coming down. I'm going to keep the ones here at the bottom, but we are coming down. So there was no opportunity to get in here. 4-hour candle has got about 40 minutes to close. We've broken this 4-hour demand. So there was no opportunity for price to come back, touch this red area, and then go down. It didn't, right? That was the area that we had marked. Price had touched a 30-minute candle, coming straight down as expected. Okay, coming straight down. It's very likely that this zone is going to break. Hmm. I closed those pending orders. Let's get rid of all of that. Get rid of that. So this is the next 4-hour area, right? That's the next 4-hour demand zone. Now it's very likely that this zone is going to break. I said this at the beginning. There is no wick here. So we're coming straight down to this. If we break this, we're coming straight down to the next zone. And that's possibly where price can react and pull back. It's a lot of bearish volume, 200 pips already. The 1-hour candle has moved. Yeah, it's a lot of volume. 200 pips. 30-minute candles are massive. 76, 115. So yeah, it's pointless trying to buy here. I want to see this kind of, that's why I closed the pending orders, because you can see prices just falling right now. Okay, we break this, then that liquidity candle is gone too. Once this price breaks this low, we're coming straight down. We're coming straight down and we're breaking this low. There we go. Now we're coming down. This low is 164. This low is 167. No, not yet. This low is 167. This low is 164. Not yet. It's got to break this low. Once it breaks this low right here, then, so this is a liquidity candle right here, this 15-minute candle, okay? High 35.50, 35.50. The low is 31.64, 31.64. Are we rejecting? Yeah, we are rejecting. Right there. We take a buy there. Let's see. 2732.48. If you come back and break this low, then I'm going to close this trade. 64. So if price comes back and breaks this low, then I'm closing this trade. Okay, 39 pips. I'm closing the trade. We are rejecting that area to come down. Let's see how the 15-minute candle closes. Let's see how the 15-minute candle closes. So I took a very small position here. I'm going to wait for the 15-minute candle to close. I want to see how that candle is going to close. It needs to start closing above support. Sorry, it needs to start closing above this area, back above this green area. If it closes back above this green area, then great. But if price comes back and break this low here, then this zone is not going to hold. We're going to come right through this, and that's very possible. That's why I just took a very small position there. If it holds, then we're going up. That's a 180 pip move up. But if you break, it's a 38, 39 pip stop loss for about 180, 190 pips, right? So which is good. But if you break, then we're going to break this low, and we're coming to the next zone here. That's another 80, 90 pips away. Let's see how this candle closes. So we did tap here. Rally base rally, this demand zone right here, tapped. It's the 8 pip stop loss. I'd closed my pending orders, so I didn't get in on that trade. But if I did, then that was just a 8 or 9 pip stop loss for a 50 pip move, anticipating a move up here. All right, let's see if we close above the Asian low again. That's the Asian low right there. 15-minute candles need to close above the Asian low to continue back to the Asian high, and then above this, above 2750 to continue to the supply zone right there. Right now we're very bearish. Price is pushing down. Just a sec. Four minutes. Let's see how this candle closes. We are pushing up. Let's see. $39.80. Needs to close bullish above this area. Has to close bullish. We touched this candle. That's fine. That was a liquidity candle right there. Oh yeah. Pushing up now. High 967. 67. Needs to close, ideally the 50-minute needs to close above this support right here. We rejected this. A close above this support would mean price close above the Asian low. That's ideal. That's the kind of volume you want to see push up to get back to this. 150 pips. Move up. If you close a doji, then that week really doesn't mean much. Well, similar to this. If you close like this, then it's very similar to this. The next candle broke the high and continued 150 pips. Right? Very similar, same area, very similar to this candle. It's high 046. Okay. 30 seconds more. 30-minute is rejecting, just like how this rejected. 1 minute's rejected. 13 seconds. Yeah, so we did close above support. Perfect. Perfect. If you break the high, I'll take another position right here. Yeah, it's another position right there. And one position pending order right here, 87. So the idea is for this orders for both of these to price to come back up here. That's 136, 135 pips on that order. And this one is 183 pips, right? That's the whole idea. These trades to come here. I want to see price pull back a little bit more and take another position below these lows. If you retest the Asian low. Yeah, just here. Open 799, close 799. There's a pending order right here, 798. Okay. Seven five six, maybe below this low. Seven. This low is 747. Six. Right, that's better. Okay. That's the order at that fib level. That was at the below this wick here, 5-minute candle wick here. Could come down here. This is the NYSE open. So price has dropped since the NY open. We've dropped about 180 pips. Now, are we going to drop further down? That's the question. Coming straight down. Let's see. If you break these lows, I'm going to close this trade. Low 780. Low 2780. Yeah. Yeah, we're very bearish right now. It's very likely going to break. What's this low? This is 170, 167. Yeah, very likely going to break this low and come down. Once we break this low, we're coming straight down here. There is no liquidity here to hold the candle, hold price up. If you look at the 15-minute time frame, there is nothing here. These are all wicks. Price has already tested this area. There is this candle right here. The price has tested it several times. So this is the only candle, right? But that candle has been tested as well. So price is coming down. So once you break this, I'm not going to hold these trades. Yeah, I'm going to close them. We're coming straight down. Yeah, we're coming down. $31.64, $31.24. Low 67. Yeah, so I'm also going to end the stream here because that's it. I'm not going to be taking any more trades because now we're coming, once this breaks this low here, we're coming to the next demand zone, which is further down here, right? And I'm going to wait for price to, I have a pending order, right? I have a open order right there. So I might close that order as well. Once price gets to break, I'm going to leave that order. If price gets and hits break even, it hits break even, that's fine. But once you break this low, I'm going to close everything. And that'll also be the end of the stream because there is little point. Because price, once you break here, we're coming straight down. We're going to drop all the way down here. That's another 80 pip drop, right? Because there is nothing to hold price here. This candle here is, well, there is this candle. This high 287,960. 287,960. Okay, there is that candle right there. Yeah, this candle. It's possible that this candle can hold price. So this low is 960. Okay. That candle right there. And this high is 287. 287. 287. Oh, we did touch that 287. We are reacting off 287. 287. It was this candle right here. This is the candle. If you go down to the 5-minute, it's that candle. Price failed to come back in. Go down to the 1-minute. Oh, what did I do? Yeah, price failed to come back. That's the candle. 287. Price tried to come back in. It couldn't. Did we come here? Open 32.39. Yeah, we're pushing up. 32.39. We are pushing up. We're pushing up. I'm going to take another buy there. 32.39. This low is 164. So this is the candle that has to hold. Can get rid of those lines. This candle right here, that's a liquidity candle right there. And the high of the candle is 287, perfect. There is a close of that candle 3205, 3205. Yeah, that should have been the place. Stops below that candle. So idea is for this candle to hold. So let's get rid of this box here, the 15-minute. Yeah, let's get rid of that. This is the liquidity candle right here. Broke below the lows, created a new low, push price up 150 pips. That's the same move that I want to see happen again. We push price back up here. Yeah, we push back price 150 pips. So that's the kind of move that I want to see happen. And on the 4 hour, the 4 hour is going to close in 10 minutes. I'm going to end the stream also in about 10 minutes. Yeah, so we've created once the 4 hour closes, we've created a new supply zone right there. Okay, created a new supply zone right there. I'm going to include the wick, so it's just 10 minutes. So the wick of that low is 48.16. 48.16. 48. Okay, perfect. We're pushing up. So that's, yeah, that's the area that I'm gonna have to close partials at 2748. At least some of these positions. 2748. 2748. So 2748. Yeah, I'll close this one here. It's about 75 pips. This one. Also close one of these. That's 103 pips. 2748. Right, so it's exactly this move. Price pushed up here, 150 pips. That's the same move right there at that resistance, 2748. That is just underneath the London low. So we are rejecting. If we close above, this 15-minute candle needs to close back above. So we had a 15-minute close above the Asian low. Then the next one close back below. So we need another 15-minute close above the Asian low to continue to the Asian high, which is there. So 2748, and then that is 2747. Yeah, 2747. Perfect. Yeah, 2747. So 15-minute candle needs to close above the support. Again, if it does close above the support, I might just add another position on the pullback to come to 2747. That's the first area. That's the first area. The next is 2748. Once we close above 2748, which is the London low, if we close there, then we need to close above 2750, just above. So maybe 2750 is next area. Once we close above 2750, we're coming to the supply, into the supply. But the supply zone is going to come down all the way here. Yeah, so this is the area that you want to, have to get out on all of these trades here, because the supply zone is going to come all the way down here. The next 6 minutes, the supply zone is going to be here. It's a 106 pip zone. So I'm going to have to close these trades here. All of them. All of them. Because once we form supply here and we've broken these lows, price can easily retest it and continue down. So I'm going to have to close all these, including this order. I don't want to keep this order open because this candle has no bottom wick. This 4-hour candle, this doesn't have a bottom wick. Price can easily retest this area and come straight down to grab liquidity. Okay, so I don't want to be holding these trades. So we need to see a 15-minute candle close. Yeah. Sorry. A 15-minute candle needs to close above this support again, just like this did. You need to see another 15-minute candle close above this to continue higher. 5 minutes more for the candle to close. Six, 9. Yeah. Four minutes more for the candle to close. I'm going to draw the 4-hour zone and then I'm going to end the stream. Okay, so buys are here. Stops for this is under here, 2729, 2729.60. That's the stops for all of these orders. If this candle has to close above, this 15-minute candle has to close above for price, that means the 4-hour is closing above the Asian low as well, which is a good sign. All right, the 15-minute has to close, and the next one is going to probably pull back, break the high, and continue higher. So the 4-hour is creating about a huge wick, but we want, the 30 minutes is also a big wick. But ideally, this 30 minutes needs to close bullish. If it closes bearish, I don't think I'm going to hold these trades. I might close them, because if it 30-minute close bearish, the next one is going to grab liquidity from above the candle and then head further down. So I'm going to close all these trades then. I'm not going to hold them. It needs to close bullish above these candles. not below these candles. If we close below, we're closing below support again to continue down. We need a strong push up here to come to the next resistance. Still pushing down. Yeah, we're pushing down. So the 4 closes below this support here, 4-hour support. I'm closing everything, including this trade here that's at break even. I'm closing everything because once the 4-hour closes below this, that means we're just continuing down. We're going to create a top wick and then continue down. And I'm not going to be holding these trades. I'm just going to close everything, right? The 4-hour has to close above this support, 4-hour support here, for price to continue higher. And it doesn't seem like we are going to do that. It seems the price is going to push down. It's going to continue lower. So soon as this, if this 15-minute candle closes below this gray area or below the Asian low, I'm closing everything. Because that means the 4-hour has closed below the Asian low and the 4-hour has closed below this 4-hour support right here. Okay, that's where the Asian low is, and that's where exactly the support level is also exactly at that 4-hour level. You can see it works on the 4-hour, it works on the 1-hour, it works on the 30-minute, and right down to the 15 where we drew it on, where I drew the zone on. See, right on the 15 minutes. So it's a perfectly marked support resistance level, and that's exactly where price is struggling at. Yeah, so we are closing below it. So I am going to close. Yeah, we are rejecting that area. I'm going to close everything now. 30 seconds. Yeah, it's coming down. We're coming down. And once I close this, I'm ending the stream. That's it. Not going to do anything else. I've taken 2 tries for the day, and that's it. I'm not going to. I don't do more than that. It's 2 tries for the day, and that's it. You should, if you can't, if you overtrade and over risk, no matter what trading plan you have, you're going to blow your account. Okay, so we did close below. The 4-hour close below. Just close, 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 and close. Okay, that's it. All right, that's the end of the stream. We close below this. Okay, so we are coming down. All right, I'll be back here tomorrow. We do the exact same thing, do analysis, and do exactly the same thing. Okay, see you guys tomorrow.